Assalamu alaikum students, hope everyone is fine. So now we are going to discuss about IAS 16 of paper 3 financial accounting, A2 level accounting 9706. This is your instructor Abdul Rafe. So IAS 16 basically talks about the property, plant and equipment students, and let's discuss what you're going to have. It's a very important IAS 16 because a lot of questions are going to come on this and a lot of numerics also comes on this. However, on 37 IAS 37 38 not much numerics come. They only ask for explanation and understanding that the students have the concepts or not. But property, plant and equipment is basically the tangible non-current assets. As we have talked about the intangible assets, now is the discussion on the tangible non-current assets. So students need to understand that a lot of important information in this and a lot of important concepts are there that are related to the IAS 16, that is tangible non-current assets. So we need to understand that the first thing is that when you recognize the asset in the financial statements, when you are going to recognize the assets in the financial statements, it is basically when the cost of the asset can be reliably measured, when you can measure the cost of the asset, as well as when it is probable, when it is certain. Probable means that certain, the outcome is certain that the future economic benefits will flow to the entity, as we have talked about it, that these are the two main concerns. And if you can find those, you can recognize the asset. Okay, so if you have to recognize the asset, let's write it down that for the recognition of an asset, these two things are important, that the future economic benefit will flow towards us, that is, there will be benefit to the entity, to the organization from that asset, and the cost you can measure from the reliable sources. So if you can measure the cost of the asset through reliable sources, that is basically recognition of an asset. Now, according to this IAS number 16, a lot of important things can be included in the cost of the asset. Okay, the cost which can be included in the balance sheet when the asset is purchased, a lot of important things. So that is, the first is the initial purchase price at which you will buy. Then there is also the installation and assembly cost, the initial delivery cost, and those things as well that you can add also in the cost. So the cost of the site preparation, any import duties, the taxes that are directly attributable to bring the asset. So koi bhi any expense that is directly attributable to the purchase price of the asset, or that is linked to bring it into current use, और उसको use करने में, start करने में उस asset को, like for example you purchase from somewhere and you have to bring the asset to your factory, okay, and install there, and all those expenses will be counted in the cost. Okay, so we'll find these questions as well. So everyone needs to understand, this is very important, that the installing and assembling cost, initial delivery, the first delivery cost, okay, taxes are also directly attributable, import duties, the professional fees if you have paid any legal fees. Okay, so this is very important, students, that the cost that can be included in the statement of financial position in the balance sheet for the assets to bring into saleable condition, to bring into usable condition, that is basically all these: the cost of testing the asset, the cost of site preparation, so, and import duties, initial delivery, installation cost, legal fees. A lot of time they ask questions on that as well. Okay, so also this mentions the IAS 16 is a very simple and complete information provided for the property, plant and equipment. So you need to understand that these are the costs that will be included. So I'll write it down that these are the costs. Let's write it down as well. Costs included in the asset. Okay, costs that will be included in the cost of the asset, and the other one, these will be excluded. Okay, including the cost of asset, and these will be excluded. Okay, so these will be excluded that are mentioned here, that is the costs that will be excluded are, let's use a different highlighter, that overhead cost, okay, the indirect cost you will not incur, you will not add it, the indirect cost, the startup cost of the new business, and the cost of introducing a new product. So you are not going to account for advertising or these type of cost, okay, and any indirect cost. Okay, so that is very important in IAS number 16. Okay, So this is one of the method, that is cost method. So that is IAS 16 allows. So there are two. Now moving forward, this is very important that we have discussed that what costs can be included in the asset and what will be excluded. How will you recognize an asset and when do you recognize an asset? Now we'll talk about how we can recognize the asset. So there are cost model and the revaluation model. Okay, although not much relevant, but still the information is there in this IAS to be covered. So there is this, the cost model and the revaluation model, that already we know that the cost minus accumulated depreciation will give us the net book value. So there is the cost model that you can measure some assets at cost model, and then there is, students, the revaluation model, that is basically carrying amount that you do. So revaluation model is basically the same thing, in which you say that this is cost minus accumulated depreciation is equals to the net book value. In other words, it is basically the net book value model. Okay, the revaluation model is the net book value, the carrying amount will be equal. So this is basically the cost minus all the accumulated depreciation, the net book value thing. And then there is the cost model, in which you can do the measurement of the asset. Okay, so this is another concept in IAS number 16 that is related to all the property, plant and equipment. Next, you need to understand that these are very important points. Then you also have to understand about the depreciation, that you have to account for depreciation, and depreciation is a separate topic that we do it under AS accounting. So the depreciation is there, and you have to, the different methods, different policies are there, so that talks about that. So there is depreciation thing as well, but the main thing is basically the schedule of the non-current assets that you will have to make. Okay, and that is basically called the disclosure in the financial statements. Depreciation we have talked in detail in AS, that's why I'm not focusing much on that here, but all important concept of depreciation are included in the IAS 16 as well. So it's written like this: depreciation is an expense to be included in the income statement. Depreciation need not to be charged when the residual value is greater than the carrying amount. So just this is reading information. Depreciation must be continued even if the fair value of an exceeds its carrying amount. So if you have done IAS 36 with me, you will understand what is carrying amount, fair value, residual value, those things as well. And this is linked with IAS 8 as well, so we'll talk about that in detail there as well. Important thing to understand that what is the main thing in IAS number 16 is basically, I'll be drawing the format for that and we'll be solving questions on that as well. That is basically the schedule of the non-current assets. Okay, so that is basically the schedule of non-current assets, that what the examiner usually is asking students. So is the schedule of the non-current assets that you have to make, and that you have to make sure how to draw it. Okay, so that is what you have to draw in that, and this is all the information that you are going to put in that. Okay, so you are going to put all the information of this in that, and you can read this, that what is going to be disclosed in the financial statements. So basically the schedule of non-current assets, it's the note to account. Okay, it is the notes to the account, that whatever the notes to financial statements we do. So this is the notes to financial statements, in which we tell that whatever property, plant and equipment, machineries, motor vehicles, whatever assets you have, how they are depreciated for the current year, whatever, how many assets we have, what is the depreciation, closing net book value, opening net book value, everything comes in there. Okay, so for this thing I'll make a box as well. Okay, and let's try to do it here, that for a couple of, I'll do it for one asset only. Okay, so just to give you an idea, students, that what is the format and how does it go. Okay, so let's do a couple of lines. Okay, so here are the couple of lines for the format. Okay, so the schedule of the non-current assets is divided into two parts. Okay, students, one is the cost section and one is the depreciation section. I hope we will be able to complete in these lines. Okay, but let's see what will happen. Okay, so we have the cost thing there. Okay, so that we start with always the cost. Okay, so it's going to be the cost of any particular, let's say that I'm taking equipment, but you can have anything there. Okay, so I'm taking the equipment. Okay, so I'll be doing all the cost of the equipment. So there will be the opening balance of the cost. Okay, there can be equipment, so there will be the opening balance of the cost. Okay, just like the T account format. So there will be the opening balance, then you will add all the purchases that during the year, that purchases for the equipment, whatever purchases you have done for the equipment, whatever you have done, also called additions. Okay, so you will add the additions, students, as well. and if you have disposed some of the asset, you're going to subtract as well. Okay, so if you have disposed some of the assets, some of the cost, you will have to do subtract the disposal, the cost of it. Okay, so you are going to subtract the disposal, that is the cost of the equipment, whatever equipment you are disposing of, and you will eventually get to the closing balance. Okay, so that will lead to the, this is basically all based on the cost model. Okay, so you are taking out the opening cost just like the T account of cost, so that will be the closing balance of the equipment for the year ended. So this will be at the start of the year. Don't put the double line, okay, because this is format. So this will be opening balance, let's say 1st January 2000 and something, and this will be closing balance, let's say 31st December 2000 and something. Okay, so this is the cost. At the first part of this will be cost, and the second part will be this be, sir, the depreciation that students will have to do. Okay, so we're going to talk about the depreciation now. So the depreciation part, let's just put it again, that this is the depreciation. Okay, and you are going to start with again the opening accumulated depreciation that you have for this equipments. Okay, all equipments that you have from start, whatever the depreciation is this for them. So opening depreciation, the opening balance of the T account. So this is basically notes to accounts that you make, that is complementary evidence. Okay, in which you tell that what is the opening balance. As I said that we'll be doing questions on this. So opening balance of the depreciation that you are going to put, this is basically the format. Okay, students, then depreciation charge, for there you are going to add the depreciation charge. So this will be added. Okay, so it will be the charge for there, whatever the current year income statement depreciation is there, you are going to put there. For the equipment, is our case, it's the equipment charge for the year, and you are going to also subtract the disposal depreciation. Okay, whatever you have disposed this year, this asset, all the equipments that you have disposed, the depreciation, that will be the disposal depreciation that you are going to subtract here. And eventually students will get the closing balance, that is at the end of the balance of the depreciation, accumulated depreciation balance at 31st December 2000. So that's going to come as this thing. Okay, when you add and subtract, again you can put one single line here and one single line there as well. And the last step will be to get the net book value. Okay, so the net book value will be this thing minus that thing. Okay, net book value will be the closing balance of the cost. So let's say let me write down this this thing minus this thing. Okay, so it will be the balances, these two balances minus, or let's say that this is A and B here. Okay, so it's going to be A minus the B, the net book value, that is cost minus depreciation. So you are going to get the net book value. Okay, students, so this is how you are going to do it for the equipment, and similarly for the other assets as well. So let's say this is motor vehicles and other assets as well. A lot of assets can be used. Okay, plant and machinery. So for every asset you can do this, but I hope everyone, students, got this, that how you're going to make the schedule of non-current assets, that is plant and machinery, equipment, and that is basically schedule of non-current assets that they are going to ask in a lot of IAS 16 questions. Okay, so IAS 16 in a nutshell is like this, students.